The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates, with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you need to put into your mortgage calculator to find out your principal and interest payment. Don't have a mortgage calculator? Get our mobile app. It's free. RonIsMyLender.com. What did the rates do yesterday? Conventional 30-year fixed rates up 6.419. Jumbo 30-year fixed rates, they were down yesterday, 6.642. 30-year FHA fixed rate, 6.12. That was up. VA 30-year fixed, that was up 5.88. USDA 30-year fixed, 6.122. If you want our thoughts about the market every weekday or business day morning, as early as the data allows, you can go to rsrlinks.com/market minute, rsrlinks.com/market minute. It's free to you. We just put out a short, I don't know, it's like 900 or 1,000 words, just trying to recapping what the markets are looking at. And we send that out again each weekday morning. It's on our social channels as well, if you don't like email. If you are registered for it and you don't get it, yeah, I do a little radio in the morning. I do a little lending in the afternoon. So the bureaus think that, in fact, we're having trouble right now with one of them, that they don't want to send SMS text messages out for some goofy reason, because I don't know, I guess a mortgage is a high-risk loan is what they're telling us. Let's see what the markets are doing today as we speak. Let's see, we start each day with the Dow Jones Industrial Hours. I'm sorry, the S&P 500. Flat right now, 0.37. It's up 0.37. Really doesn't mean anything when it's not up, when it's only up at 0.37. That's really, it's saying it's doing absolutely nothing. We expected a little different today, because we've been waiting all week for the data. And yeah, we didn't get a whole heck of a lot of data that's moving the markets, as you can see, because we've got the 10-year Treasury, and my I don't know why my board is moving very, very slow today. It must be like me getting a little old and ready for the weekend. Maybe that's what it's all about. So let's take a look and see the 10-year Treasury. That's up about 1 basis point right now. We've got the mortgage-backed securities. If my screen would update, it would really help me. But I wonder why it's going slow today. Maybe it's because it knows that we're going to go out for Mitchell's birthday and it doesn't want to deal on anything. 10-year Treasuries up 1 basis point, and the mortgage-backed securities are up 10 basis points finally. Now remember, when we talk about the 10-year Treasury, we're talking about the yield. I don't know why they do this, but whenever they talk about it, they put the yield out there on the 10-year Treasury, but they put the bond price out on mortgage-backed securities. I guess I do know why, but it's just to confuse you. When the bond goes up, rates go down. Bond's up right now 10 basis points, so rates are down just a little bit. What's driving all this? Well, it's the Consumer Price Index this morning. That came out. September Consumer Price Index report showed that overall inflation rose 0.18% for the month, which was rounded to 0.2%, and hotter than estimates of 0.1%. Year-over-year inflation decreased from 2.5% to 2.4%, hotter than the 2.3% expected. Core rate for those that don't need food or energy increased by 0.31%, hotter than the estimates of a 0.2%. Year-over-year, core CPI increased from 3.2 to 3.3, which was expected to remain at 3.2 or even go down a little bit. If you annualize the last 3 months of headline readings, the year-over-year inflation rate would be 2.1%, with the 6-month run rate at 1.6%. If you annualize the last 3 months of core readings, the year-over-year reading would be 3%, with the 6-month run rate of 2.6%. We are seeing progress, although it is slow. Some of the things that caused inflation to rise were transportation costs, rose 1.4% during the month, includes motor vehicle insurance. Yikes. Motor vehicle maintenance and repair, and airline fares, all of which went up. Motor vehicle insurance rose 1.2% last month, which is an acceleration from the previous report. Year over year, motor vehicle insurance decreased from 16.5% increase to 16.3, but still remains elevated. Airline fares rose 3.2%. Motor vehicle maintenance and repair rose 1%. Apparel rose 1.1%, which all worked against us. Shelter cost makes up 45.8% of the core index, rose 0.22% last month and 4.85% year over year, which is a decrease from 5.2. The monthly reading was encouraging, easy for me to say, as it may be the first sign of shelter catching up, will make it much easier to make progress on inflation going forward. Rents rose 0.28%, while owner's equivalent rent, I'm not going to get into what that is, 0.33. Lodging away from home figure declined by 1.93. I don't know why they put that in there. It's so crazy. Initial jobless claims measures individuals filing for unemployment benefits for the very first time, rose 33,000 to 258,000, which was much higher than estimates of 230,000. Highest level of claims since August of 2023. Okay, don't believe the media, because what the media is saying right now is that number is increasing because of Hurricane Helene. Now, let me ask you a very simple question. If a hurricane just came through and devastated your house and your neighborhood and your employing, is the first call you're going to make to go and get on unemployment? Or are you trying to find some place for your family to live? Maybe next week we'll see that the issues come up with the employment going into those numbers. But I don't believe that that's what's driving them right now. The media wants to make those excuses. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.